Welcome back to another episode of The Week That Was, where we bring you the key highlights from the week that just went by. Starting off, Indian equities performed in tandem with global peers. Major US indices have ended flattish for the week, while Europe underperformed. In the upcoming week, we expect Nifty to extend consolidation in 19,400 to 19,800 levels amid stock-specific action. If Nifty manages to sustain above last week's high of 19,800, it is likely to regain momentum. In a volatile expiry week, we saw small caps outperform Nifty. In fact, the Nifty Small Cap Index gained 1.7%, while Nifty by and large moved sideways. Speaking of gains, Rainfall gained momentum in September with heavy spells of shower that has lowered the monsoon deficiency level as we head into October. Speaking of which, did you know that October has been one of the stronger months for markets in the last 10 years? Nifty has given positive returns on 9 out of 10 occasions. The average return for Nifty for the month of October in the last 10 years was nearly 3%. Moving on to sectors, we are positive on BFSI, auto, pharma, power and PSU baskets. Now, foreign flows have paused in the last 2 months. In fact, we've seen a trend reversal in FPI buying in September. SPIs have finally turned net sellers after buying for 6 consecutive months. This sell-off has largely been visible among index heavyweights while the broader markets continue to do well. The overall real estate demand-supply scenario construct remains robust, with all-time high absorption and all-time low inventory. The real estate sector and Nifty Realty in particular has been an outperforming sector in the last 6 months. Brigade Enterprises and Mahindra Life Spaces remain attractive picks in the real estate space. However, there's a part of the market that is not doing so well. The latest Accenture guidance points towards continued muted outlook for IT companies. In our view, Accenture's guidance is tad lower than expected as economic growth challenge in the US are likely to impact FY24 performance. From the Indian IT company's perspective, Accenture commentary implies no major improvement in macro or revival in discretionary tech spends in FY24. Most Tier 1 IT companies like Infosys, Wipro, Tech Mahindra and TCS have also indicated a muted financial year 24. All eyes will be on HCL Tech, which defied the trend and showed double-digit growth earlier. Similarly, Tier 2 companies have guided for mid-teen organic growth, but sustained US growth challenges could be a risk to their guidance ahead. Due to its order backlog and inflows, L&T is in a comfortable position of meeting its revenue growth and order inflow growth guidance of financial year 24. With its stock gaining 45% this year, it appears that L&T has made the most of the Indian capex cycle. We believe the ordering environment across all segments like power T&D, buildings and factories, hydrocarbon, defense, water, infra and export markets will continue. Speaking of big orders, Indian Navy has submitted a proposal to the government for the procurement of a new aircraft carrier. Cochin Shipyard, which executed the second indigenous aircraft carrier INS Vikrant, is a major contender to execute this project after all approvals from government are in place. The stock, by the way, has doubled this year. Though we don't have the specifics, the size of the new aircraft carrier will be similar to INS Vikrant. The contract is estimated to be worth at least Rs 30,000 crore. Apart from Cochin Shipyard, companies like Bharat Electronics and Midani will also be the beneficiaries, as Midani will be involved in supplying of fission materials or superalloys, while Bharat Electronics will be involved in supplying key electronic systems or subsystems for the platform. Moving on to the not-so-positive news, SEBI halts MCX's new platform launch due to technical issues. Shares of MCX, that is Multi Commodity Exchange of India, which is the country's largest commodity derivatives exchange, plummeted over 8% on Friday in the worst fall seen in the last 3 months. The Directorate General of GST Intelligence, that is DGGI, has sent out a dozen pre-show cause notices to online real money gaming companies over GST dues of Rs 55,000 crore. This includes a GST notice of Rs 25,000 crore to fantasy sports platform Dream11, making it India's largest indirect tax notice. Now, on to your favorite part, the hidden gem. This week, it is Balakrishna Industries. The company is the market leader in the niche off-highway tire segment in the export space, which is used primarily in agriculture, which constitutes 63% of its sales, and then mining and other allied activities. BKT stands apart from the rest of domestic tire peers in areas of capital efficiency and a strong balance sheet. Its global leadership is a result of frugal engineering, backward integration, and low manpower costs. Furthermore, the business model is unique and difficult to replicate given the high capex intensity and the need to develop high number of stock keeping units. We assign a buy rating on BKT amid healthy sales growth prospects coupled with margin recovery leading to robust bottom line growth. Margins are expected to revert back to the 25% plus trajectory by FY25. Amid a low of 18% that it clocked in FY23. That's all for this week's major news. We'll see you as the week that will be concludes, and all we're left with is the week that was.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.